Hello, everybody. Apologize that we're late. Of course, I had some technical difficulties on my end, and we're up live. So we're going to give you the 15 minutes as we promised. Once again, my name is Carlos Millsap, and my partner is,
Hey, it's Brad Stewart here from Southern California.
and we're so glad to be here with you guys today. Um, we kicked this thing off yesterday, just talking a little bit about infinite banking and what infinite banking is, and when it began, and who coined the term infinite banking concept. Tonight we're going to answer a couple questions that we know are frequently asked questions, and we're going to do that once again tomorrow night, and we'll do it every Tuesday, Wednesday, and Thursday. So without further ado, we're going to go ahead and take a look at uh, our first question that we're going to address this evening. And let's go here, and it's going to be voila. So, how much money do you need to start an infinite banking concept plan? We also call that a Wealth Made Easy for You plan. How much money do you need? And Brad, what is the misconception about this?
The misconception of how much you need to get started. A lot of people think that it's type of thing that to get started you need buckets and buckets, maybe truckloads of money to get this thing off the ground. If you've got that, that's a great asset to be able to build on, but it's not the minimum that you would want or have to have to get started. So um, I think the biggest thing we want to look at when we would talk about this is what do you want to do with the money that you put into this account? And I think that begins to open the doors that will allow us to answer the questions. If you say you want to buy a house or pay off your house, you might want to get started with a little bit more than what you had originally thought. But when you consider the amount of money that people are putting into their 401k retirement plans and some of these other things that are going to be taxed up the yin yang down the road, you're going to be really happy about the idea of putting more money into this plan and be able to have not only access to it tax free, but also be able to use it and move the money to pay some of these debts and things that you want to use it for on a tax free basis as well.
Okay, great. Exactly. And that's my thoughts, because a lot of times when people think about life insurance, they want to pay as little as they can. But this is quite the opposite. What we want to do is we want to get as little death benefit as possible, but we want you to put as much money as you possibly can. You have to think of this infinite banking plan as if it's a savings account, or your retirement plan, or as Brad was saying, whether you're saving for a house, whatever it is. So you want to stuff as much money as you possibly can into the infinite banking plan, because when we design the plan for you, we're designing it for you to have access to as much cash as you possibly can. So we're going to design it so that you will have access to the majority of that money that you're putting in. So you don't have to feel, you know, that you have to hold back money. You have to put as much money as you possibly can into it, because you have, after 10 days, with most carriers, you have access to that money. And realistically, once that money register with the insurance company, you have access to that money. So, you know, don't hold back. Stuff that policy with it. Allow that the magic of compound interest to get a hold of your money, and it's going to do some magical things for you. Okay,
I think you said
so
something that was really interesting there too, Carlos. You said, how much cash do you want to have access to?
yeah,
And when you look at it in those terms, most people think that when you're talking about life insurance, they're thinking, how much death benefit do I want?
right,
So the
exactly,
death benefit tends to be higher because you want to make sure that you're going to take care of your family, that they're going to be down the road for several years, be taken care of. But at the same time, This is a different concept because the life insurance that's available in this is an added benefit. Think differently now, an added benefit that is there for you. You're purchasing the ability to be able to not only save money and put money away, but to access the money, cash. So that was a key word I heard you say there. And I thought that's really, really key in our understanding, is that it's the cash that's going to pay those bills on a tax advantaged basis to help people get along in this crazy economy we live in today.
Exactly. And Brad, you and I both know that one of the things we're starting to see now is that people are starting to pull their money out of those CDs. They're pulling the money out of money markets. They're pulling money out of 401ks, 403bs, and they're funding these policies because they're getting uninterrupted compound interest. They're getting growth, and they don't have to worry about market volatility. So they're getting everything that they want out of this policy, and more. Because if a person was putting, let's say, X amount of dollars inside of a CD or money market account or savings account, and they were to pass away, unfortunately, all their family's going to get is the money, the cash that was inside that account. However, we know that if they put their money inside of this plan, there's a death benefit that's attached to it. So your family will get the cash that you put in plus that death benefit. So we're actually giving you a lot more benefit with this type of plan.
Well, my first thought too was the idea that this is a 2-for-1 plan, but it's not. It's infinite banking. You talked about this yesterday. The thinking is, how many things do you want to do with this? And if you systematically go through them, line them up, you hit the first domino, guess what happens to the rest of the dominoes? You just systematically pay those debts off. You systematically save. My goodness, the opportunity is infinitesimal as far as what you can do and what you can achieve.
Absolutely. Absolutely. So now that brings us to our second question here. So you've talked about the positives of this program. So what are the negatives that would be a problem for me and my family? So we see a lot of people talking about the good things about infinite banking program. So it has to be something negative about it. What can we come up that's negative about it?
Well, I don't want to be the devil's advocate, but the first thing that popped into my head was, oh my goodness, it'll be a curse that you'll be able to sleep well at night, that you'll have peace of mind. What a curse that would be, to be able to have peace of mind. That's not exactly a negative, but for a lot of people that don't sleep well with where they're at and what they're doing currently on a savings and a investment basis, a good night's sleep might come in handy and go a long ways as far as bringing you peace of mind down the road. I know that's not the essence of the question, but
Right.
That was the first thing that popped in my head when you said that.
Nothing wrong with that at all. The thing that popped in my head is, unfortunately, not everybody's going to be able to health qualify for it.
There you go.
And that, that's a huge negative a huge problem for people in their family.
You
Is
bet.
it's so good that these insurance companies have to have people go through a medical. They have to go through an exam. They have to have a person come out and to examine them for their health to make sure that this is something that they can qualify for. So that in itself could be a negative. Now you have some skeptics that are what we call financial entertainers that will say certain things about the cost of insurance and things of that nature that might be negative as far as they're concerned. But what they don't tell you is that as time goes on, because you have so much money into it, and because your balance of your policy, the balance of your cash is rising, your cost of insurance goes down. However, when you look at quite the opposite, when you're putting your money into a stock account or 401k or something like that, as time goes on and they're paying a percentage, they're getting a percentage for managing your money, guess what? Those costs goes up. So what
Those are
appears
called
to be
fees.
negative, yeah, fees. They call them fees.
Not fleas, but
Yeah,
fees.
but they call them for management, for managing your money. They're calling
Correct.
managing your money. Somehow they manage to lose your money too. When we talk about life insurance, you don't lose any money. So that's a great plus there that we don't have to worry about. So now we addressed that question. Now we have one other question here we're going to address for tonight, and that is, how safe is my money with this idea? And I can understand that, especially in light of what the stock market has been doing lately. It has been ridiculous. I looked at the stock market today. I look at all that red. Oh my goodness, that is. So you of course you want to know how safe is your money. So Brad, is this something they're going to keep them up at night worrying about their money inside of this plan?
Well, as I mentioned earlier, I think one of the big pluses that I see with this plan is the whole idea. Infinite banking does allow you to sleep better at night. You're not going to be up all night worried about my money, about this happening or that happening. Something that happens halfway around the world or the other side of the world is not going to keep you up at night on account of your money being in this whole life policy that you are growing. Now, I think that for the most part, your money is extremely safe, and it's based on several historical examples. Let me just rattle off a few of them here, just to whet your appetite. Mutual insurance companies have been around in many cases over 100 years. I mean, just recently, some of the companies that most of us grew up with, Sears and Roebuck, gone. Several years ago, company that I grew up with, Montgomery Ward's, gone. Kmart, gone. The list goes on and on and on.
And that's not talk about banks.
What's that?
Let's not talk about the banks.
Well,
a lot of banks that failed.
Well, there were a lot of banks that failed during the Great Depression because the laws were different.
Right.
But the majority of those companies, or excuse me, majority of those banks that were the larger banks have survived because of the fact that they invested safely. The government saw the need to change the laws, and they can't call your note due on your mortgage overnight like they did back then. But I mean, most of them are paying dividends and have paid dividends for almost as long as the company's been in existence. At least most of the companies that I know that we work with have a long track record of paying dividends on the policies.
Absolutely.
And let's remember, if we're talking a 100-year-old company, we're talking about companies that have survived not just poor economies, but bad economies, i.e. the Great Depression, the Great Recession, the World Wars, other armed conflicts that have gone on. They're still in business, they're still open for business, and they're still paying dividends. I don't know that you can say that about a lot of the stock companies that are out there. And I'm just talking about some of the ones that were, very well known, like Sears and Roebuck and Montgomery Ward's. Just as example, I mean, more contemporary would be Kmart. But those guys are gone, and the insurance companies just keep on going and doing what they do and do it well.
Absolutely. Yep. So the bottom line is that inside this plan, your money is extremely safe because you don't have to worry about market volatility. That's something that you just do not have to worry about because your money is not in the market. In fact, one of the things that you're going to get that you're not going to get with anything else, you're going to get guarantees, growth, safety, and liquidity and control. You actually have control of your money when it comes to this type of plan. When it comes to some of the other tax qualified plans and even with the bank, your money's going to be safe, but you're not going to get any growth. So we wanted to go ahead and give you that little bit of tidbit this evening. Tomorrow we're going to be back with some additional questions. If you watching this video as after it was live, please go ahead and make sure that you put your questions in the comment section. If you want us to contact you, go ahead and leave your name, your email address, your phone number if you'd like for us to contact you there as well. But we're glad that you came out and spent the time with us this evening. Once again, I'm Carlos Millsap, and this is my partner, Brad Stewart
here.
All right. So
Glad to be here with you folks.
Thank you guys for coming out to watch us this evening.
We'll see you tomorrow again.
See you tomorrow. Bye-bye.
Good evening now.